Hi, this is David True. Those of you who have attended the intelligence sessions in the past might know me from ones I was moderating earlier in this year. The first round on COVID and payments and one on COVID and lending. We've got a great agenda set up for you today. I'm really, really looking forward to it. A couple things I'd like to say is that one is that we have a good turnout. The turnout is international. We have 250 or so people attending who've registered to attend, and they come from all around the world. So keep that in mind as you're speaking. The second is that questions are always welcome. So there is time allocated at the end of each session for questions. But if you have questions, please do not hesitate to post them during, because then we'll know that you're ready and know the question's there. And if time permits, we'll bring the question in. That would always be a good thing. And second, I would like to give a shout out to the sponsors. One of them actually is my firm, Pagility Advisors. We think about it as, it's not pay guilty, it's Pagility, like agility in payments. And the other one is NetHone. And NetHone will actually be speaking a little later in the day about managing frictionless fraud. And as COVID has increased the amount of e-commerce transactions, fraud has become a much greater issue. However, we're very fortunate at the beginning here to start off with Abhishek Saurav from the World Bank, because a global perspective of things is a wonderful way to start. And I had the pleasure of speaking with him a couple days ago and going over some of his research. He's left more of it with me to read. But it's fascinating, since this COVID is something that affects the whole world. It's unusual. We've never had anything like this in recorded memory that affects us all in such a connected way. And there's data to think about that. So with that, I think I'll turn it over to Abhishek and just let him commence with his presentation. Please.
Thank you, David. Give me just a second to pull up my slides and I shall commence.
But as I'll say, for our conversation today was fascinating. And this is something that I said is, I've said to people before that this is a fantastic experiment. Fantastic is perhaps a bad word, but an economic and social experiment that touches the whole world at the same time. And he works from a position to observe some of those effects. So I'll turn it over to you.
Perfect. Thank you again, David. I'm very pleased to join my panelists and thankful to Intelligence for offering me this opportunity to offer keynote address in this event. So I have about 20-25 minutes, and I want to get straight to the point. There'll be a few things I'll be touching upon during my presentation, which you can see on the slide. Number one, I want to talk about the magnitude of the economic fallout of the pandemic that we're looking at, just to set the stage. I want to apprise the audience about the links between payment systems and economic growth, whether it's good, what evidence says about it. Number three, I want to explore certain opportunities amidst change that the crisis has forced upon the world, and major trends that may be transpiring in the payments industry. And finally, I want to conclude with a short note on economic liquidity, why it is important for businesses, and what type of policy support has been offered by governments around, and what consequence it has for future generations. So let me kick it off. My name is Abhishek Saurav. I'm an economist at the World Bank Group. All views that I express in this presentation are strictly personal, so I'm speaking in personal capacity. The first thing I want to highlight is that within a very short time, that is about 6 to 7 months, the COVID-19 pandemic has inflicted a very severe shock to the global economy. To be able to appreciate the magnitude of effect, recent estimates by the World Bank suggest that globally, the economic contraction is estimated to be just upwards of 5%, 5.2%. These estimates are only estimates. They are baselines and different scenarios. They might be revised, they might not be revised. So this is something to look out for. But on its own, the magnitude is high and the consequence is great. Also, to set the perspective, the effect of this, the universal effect of the pandemic, is such that greater than 90% of all economies in the world are simultaneously in 2020 expected to be in recession. Most of them are already in recession. And we have not seen something like this in several decades in the past. This is what the graph to the right points to for those who are visually oriented. In many ways, we look at the pandemic as exacerbating, accelerating trends that were pre-existing. So we know that in pre-COVID times, there was this onslaught on consumer confidence, investor confidence for a variety of reasons. High debt, leveraged banks, and for a variety of economic and financial reasons. And what that means is that while we've entered the pandemic, we have not been in a position to be ward off the effects of the pandemic, which probably is a further driver of the economic fallout that we are experiencing. I want to caution that economic fallout does not mean the same for different people. So we should apprise ourselves with the fallout and the consequence for some sections of society globally who may be more at risk. Because this pandemic implies loss of incomes for millions of individuals who are working, who are trying to work, who are trying to find employment, and estimates suggest that there is going to be a marked increase in global poverty. Why am I speaking about poverty and loss of opportunity? The reason is that all of this converges on payments. We know that economic activity is directly related to the number of financial transactions, however facilitated happens. So we know that the pandemic has reduced, in terms of payments, both the incidence, that is the frequency, and the volume, that is the magnitude of financial transactions. An economic contraction that we are experiencing around the world is likely to have its lingering effects on payments and transactions going forward. So I'll leave you with that thought, and I want to now focus on the relationship between payments, what we know from empirical evidence, between payments and economic growth. So most of us, I think, know, but it's useful to reiterate that there is growing empirical evidence that suggests that non-cash and modern payment systems support economic growth. In the larger picture of the economy, it's important to place payments in that context. So we know that the economic forces of demand and supply intersect at financial transactions. This is how market equilibrium is attained. So there is every reason, incentive, both for the private sector and the public sector, so governments and businesses, to ensure that these transactions are, one, secure, and two, efficient, because it's a matter of economic efficiency, the working of the system. We know that, I told you about the relationship, a positive, significant relationship with economic growth. But the real question is, how does it happen? So that's where I'm trying to show you in the slide here through the visual aid, the types of the different channels through which payment systems affects economic growth. So we know that payment systems lead to higher consumption because there's less friction in the market. Deals that could not have been made because of inefficient payment architecture are now made, and hence it supports consumption. It also supports trade. It's really useful for traders, both inside borders and across borders, to transact when modern payment systems are available to them. And finally, because it is all trackable and visible, it enhances tax revenue for the government so that there is allocation into critical investments that governments and policymakers want to make in the economy. So it seems like it's a win-win for all. But let me also caution that there is a slight kink in the story. And the kink in the story is there's good reason to believe that benefits of modern, efficient, secure payment systems do not accrue equitably to all the people in the world. And a lot of people give it a lot of thought. Next slide is about that. So we know that there is this trade-off, implicit trade-off between efficiency and inclusion. This slide touches upon that. Modern non-cash payment systems are not accessible to everyone around the world. More than 1.7 billion adults have no connections with banks or financial institutions. In fact, some of the modern fintech and digital solutions are trying to ameliorate that problem itself. That is, those who have not been banked before, how to bring them under the net. And I think that's commendable. And great strides have been made in the past decade, in the past 2 decades, in providing access and bankability to masses. As a consequence, about 70% of adults have now accounts. So there still remains about 30% of the world, of adults in the world, who do not have access. Let us understand who these individuals are and where they are, because this is the map of equality of the world in terms of financial inclusion. So one, we know that they are predominantly, people who do not have access to banking are predominantly from low and middle income economies. There is a 31 percentage point difference compared to their peers in high income countries. We care about that because for global growth, development in low and middle income economies is important. Number 2, women as compared to men have a 9 percentage point difference. That is, fewer women have access as compared to men. Number 3, low income households, people who are poor, the many ways of defining poverty, but the threshold of poverty, however defined, when we look at that, we find that individuals from poorer households are 13 percentage points less likely to have access to have bank accounts and financial services access. Similarly, it's about rural people in rural communities also have lower access. Why is this important? This is important because a third of global population, which is a sizable population, will not be able to leverage this great technological strides that are being made, regulatory and technological strides that are being made in the industry. And we care about that. And what I want to emphasize is that the emphasis, the industry's emphasis on efficiency is great, commendable, we should do it, but they should not eclipse the priority of inclusion, that is everyone in the net. And that's when economic equality is advanced. Finally, on payments, I want to kind of recapitulate the major changes that I observe in the marketplace. But let me contextualize this according to what's happening during the pandemic. So during the pandemic, we know that pre-existing shifts towards more remote, contactless, cashless payment solutions have received a significant nudge. The nature of the pandemic encourages users, individuals, to use these contactless ways of payment. And that's a significant nudge because this is almost a market shaping force. I observe that there are 3 enabling significant shifts that are happening simultaneously. Number 1 is related to regulation. So we have seen in the recent past that, and by recent past I mean the decade that has passed, enabling banking legislation, for example, PSD2, real-time payment systems around the world in several developing countries, allow non-banking entities to enter the picture. We like that because that enhances competition. It also makes the environment, the banking environment, more rich. Areas such as digital identity and know your customer, these were highly regulated areas. Some of those binding constraints of regulations are now coming apart. I mean, they're relaxing, and these are now subject to automation. This is a significant change. Significant change because now it allows technology firms to enter the picture and automate away these processes, which cause significant delays, as a consequence, inefficiency in the system. That's change number 1. The second change is the competitive landscape is changing. Rapid advances in technology have enabled the entry of new market players, as I mentioned. This is intensifying competition. Now they are competing with incumbent firms, and we want such competition to exist. Simultaneously, and I don't know, this is the jury is out on the competition effects of this, but simultaneously, large technology firms, I don't want to name them for a variety of reasons, but large technology firms have also entered the market to offer seamless payment and merchandise purchase kind of experiences to their customers. And this is usually when both large and small entrants enter the market in a landscape where there were few banking and financial service providers. It's good for competition. So the expectation is that if certain type of regulations are maintained, it's good for the consumer in terms of the quality of service, prices that we get is good on those accounts. And finally, the consumer has evolved. And that's to say that the consumer is more aware of data use and misuse. And I think that's essential to make consumers and users kind of responsible beneficiaries of these technologies. And finally, we know that in the backdrop of everything, data security, data sovereignty, these issues prevail, but conditional on those attributes of data being taken care of, we know that consumer preferences are shifting slowly because of the pandemic, furthermore, towards contactless remote transactions. So these are the three big trends that I see. How it bodes for the payment industry, I think a lot is being said and written about this in terms of the golden opportunity, the opportunity of the century and such. But I think we will all see what happens, because I think one thing to keep in mind is that this is a significant economic contraction. And no matter how much we want to become efficient, secure, there's always that in the backdrop. So any advancement I would understand is going to happen during recovery. And I think my guess is as good as yours on when recovery is around the corner, because it might differ for regions, for countries, for advanced economies versus low and middle economies, income economies. Finally, recognizing that my time is coming to a close, I want to touch upon economic liquidity. And what I want to note in this is a very broad topic. A lot is being written, done about this by policymakers. That what I want to leave you with is that the demand and supply shocks that the pandemic has inflicted on the global economy has resulted in highly diminished sales revenue. Some estimates suggest 70%, 80% of sales revenue has been affected, so adversely affected. And this has consequence for liquidity. It results in liquidity crunch for businesses. What this means in day-to-day operations of businesses is that they are unable to meet their contractual obligations to their creditors, to their suppliers, and partly also unable to maintain the workforce, which is designed to support production at a much higher level. So the problem then very quickly becomes that it precipitates into job losses or reduction in the number of jobs. Empirical evidence that's coming out suggests that both of these are happening. That is, people are working less or being asked to work less, and some people are also starting to lose their jobs. And finally, the issue of production capacity itself. That is, firms design their production capacity for demand that they register or they want to respond to. But with lower demand, that is, sales are not happening, it is very difficult to maintain that production capacity. It's not simply a function of switching the machines off. It's much more than that. It's very expensive to maintain a lot of this capital investment. So that is a problem. And liquidity creates all these problems for businesses. I'm sure there are a few that I did not mention. And as a result, the eventual loser, I think, is the marketplace, and by extension, consumers, because the sustained effects of the pandemic are forcing otherwise productive, solvent firms towards bankruptcy and closing. Now, of course, this is being registered by policymakers, right? So they know that liquidity is super important for firms, for employees, for markets and consumers. And because of this, we have seen very strong policy response from governments around the world. Trillions of dollars, and now I'm on the right side of the slide to just give you a sense of what type of government support is being extended to businesses. So trillions of dollars have been mobilized globally by governments towards direct and indirect supply liquidity programs for firms. And there are a variety of solutions, right? So there's short-term loans to get over the hump. There's long-term debt. There's equity support, taxes being deferred, credit extensions are being provided. So these are all type of financial type of solutions that are being thrown at the liquidity problem. There's also something happening that is the structural problem of insolvency, because a lot of these firms facing bankruptcy were moving towards insolvency when they were perfectly capable of carrying on, but had it not been for the pandemic. So there's some insolvency relief that is being extended, which allows more flexibility in the process. And in some cases, it's simply just delaying the proceedings so that we get over the hump, hopefully, and then companies, firms, businesses, producers do not have to go insolvent. So I think these are all very smart solutions, and there's several others, but these are the main ones. But I think we should ask the questions that governments are responding, but at what cost? And the cost of that translates into policy challenges of the future, which I think we should all be aware of. Number one is, if you spend money now, the problem of high government debt is almost certain. And the question is, who pays for all this support? Is it going to be the taxpayer, that is? Are we somehow going to foot the bill directly? Or is it going to come from reallocation between government programs? And if that happens, then the question becomes, which government programs stand to lose, which government programs would remain? That's a very important policy question, because now we are talking about prioritization between different types of programs, some welfare, some growth, and some development. There's also a significant concern about market distortion. That is, the question is, the firms that receive this kind of financial help from governments, do they have unfair advantage over firms that do not receive support? And this question, I think, is evidence in the fact that sometimes a polluting company, industry, may be eligible for support. Should they be extended support? And should that support be the same as a sector which is green? So these type of kind of tricky questions are facing policymakers, and I don't think there is enough being done to account for these concerns right now, because we are in damage control mode. And finally, it creates this classic problem of moral hazard. Will unconditional support to businesses, this kind of liquidity crunch support to businesses, incentivize financial prudence? And I think that is a question that a lot of empirical research is going to look at over time. But I think these are the major challenges that we'll face in response to economic liquidity policies that governments around the world have instituted. So with that, that was the content I wanted to share with you. I'll pause, and if David is okay, we can take some questions. We can have some discussions. So I'll pause there. Thank you very much.
So this has been fantastic. One purely mechanical question that came up was, are these presentations going to be shared? So I'm presuming you're okay with sharing this presentation with the participants?
Absolutely.
And a question that I have is I know that you're leading a global research advisory to investigate the effects of COVID-19 in private sector and remedial public policy support to developing countries. So I know it's early. We're, as you said a moment ago, very aptly, that we're still in damage control. Do you have any view on particular initiatives that you see as being effective, or is the fact that we're in damage control mean that it's still too early?
No, I think so. This is the role of early evidence, right? So one thing is, it's very difficult to assess performance, that is, evaluate success and different measures of performance while actually doing it. But yes, of course, this is the issue about visibility. If we do not see firms going bankrupt, closing, that itself is success. If we see, compared to, of course, what would have been the counterfactual. So I think some of these things are working. To what extent they are working, I think the specifics are going to come out only after we evaluate the success of these programs. We are relying here on wisdom that we have gathered from prior economic declines, the wisdom we have gathered also from theoretical underpinnings of what is going on. So I think it's a time for throwing the kitchen sink at the problem. I think that's the thing. That's the thing. Provide all tools and approaches to solve the problem, and hope that something sticks and something works. I think it's that state of the economy right now.
So if we wanted to follow, if participants or listeners here wanted to get some insight into what you guys are finding, where would we go to?
So there's a variety of research, right? So one is you should just use Google to find what is the evidence on effectiveness of these programs. I think Google searches are going to lead you to not just the World Bank, but OECD, the IMF, because all multilateral organizations are working on different programs. So I would recommend going there, but if you want to go specifically to the World Bank and maybe relatedly to the IMF, both these organizations are tracking government programs country by country. So I would encourage our audience to go there. The tracker is fascinating for your country. If you're interested in that, you can see a summarized version of what's happening on monetary policy, fiscal policy, and other policy support measures for businesses. So I would say that's the first place to go to understand what's happening.
Excellent. Listen, I very much appreciate you making some time in your day for this. This has been fascinating. I will ensure that the people from Intelligence make this presentation available to those who wish to download it and get a copy of it. And yeah, your comment was apt, as I said a moment ago. We are in damage control. We're still figuring this out. And to go back to the point I made earlier, we capture data in a way that we've never done before in history. So there will be lots and lots of information to analyze and figure things out. But I mean, we're just entering the autumn, so we don't know what that's going to mean. So you're right, there's many, many things. The stimulus in the US, they still can't figure out what to do next. So we'll see where that goes, and that will take some time. And then the other interesting question about which existed prior to COVID and will certainly continue is what happens to people who don't have access to electronic payments. But those are all items that some of them existed prior to this, but they've been accelerated by the advent of COVID. And I very much appreciate people like you who are doing this great research to help us deduce something useful from all of that, what's going on.
Great. Thanks, David. I'm happy you see value in this, but I also wanted to say that this time of change in crisis is also an opportunity, which I think one of the slides was arguing. The people who have not been able to leverage digital technologies for this, I believe this is the right time when the appetite for digital has exponentially grown amongst people who are not connected. I think this is an opportunity also to apprise them of these type of services that exist. Of course, attaining their trust and confidence in those systems is paramount, but I think it's a step in the right direction.
And there are a plethora of policy initiatives that could be done, both policy and initiatives from the private sector to encourage that. So, and we're seeing many, many, many firms who are trying to address that. So it's fascinating this time. We are moving into our next discussion.